The next few minutes might just change the way you think about banking. Hello and welcome to Practical Personal Finance, where you get the information you need to understand and succeed with money. In this video, I'm going to help you understand what a credit union is and how credit unions compare to traditional banks. I'll give you the pros and cons of credit unions. And at the very end of this video, I'll give you my recommendation for whether or not you should do your banking at one. I'm going to do my best to give you an unbiased summary, but for full disclosure, I've done my banking at credit unions for the past 13 years, and I'm a big fan. A credit union is a not-for-profit organization that provides banking services like savings and checking accounts, credit cards, and loans to help you purchase a home or car. It's a lot like a bank, and if you didn't know any better, you might get the two confused. In fact, I personally find it difficult to talk about what a credit union is and what it does without comparing it to a bank, because they're just so similar. Both credit unions and banks offer us a safe place to store our money, to deposit our paychecks, and withdraw cash to make purchases, be it in person at a branch or an ATM, with a debit card, or electronically with routing and account numbers. That being said, there are some subtle differences between banks and credit unions. Banks are for-profit corporations that are typically owned by shareholders, people who have invested in their stock. These shareholders have invested their money with the expectation that the bank will earn a profit and generate a positive return in the form of higher stock prices, dividends, or a combination of both. On the other hand, credit unions, as I mentioned at the beginning, are not-for-profit organizations, and instead of being owned by investors, credit unions are owned entirely by members who have active accounts. That's a big deal, and here's why. Banks need to generate profits to keep their shareholders happy, and in order to continue generating more and more profits every quarter, banks are constantly looking for ways to boost revenue and cut expenses. Some examples might be slightly higher interest rates on mortgages and auto loans, monthly maintenance fees on checking and savings accounts, and less interest paid on deposits. On the other hand, credit unions don't have any shareholders to worry about. It doesn't matter how much or how little profit a credit union generates, so long as it's able to cover its normal operating expenses. If a credit union does manage to generate a profit, it gets distributed back to its members in the form of lower interest rates on loans, fewer fees on accounts, and higher interest rates on deposits. Some additional ways that credit unions distribute that extra revenue might be donations to local nonprofit or community organizations, extra services like free document shredding or coin counting, and free personal finance courses. It's these additional benefits that really tie credit unions to the local community in which they operate. That brings me to a potential downside to credit unions. Most of the time, they're relatively small, local organizations. They tend to have fewer branch locations. If you're traveling, the odds of you finding a branch to walk into are slim to none. And if you move to a new city, you're probably going to need to find a new credit union. There are exceptions with a few of the larger credit unions, but the vast majority are small, local institutions. That being said, many credit unions are part of something called a shared branch network. This is a national partnership among credit unions that allows you to walk into a shared branch location anywhere in the country and do your banking, just like if you were at home. It also allows you to use certain ATMs to withdraw money without incurring a surcharge. According to Co-op Financial Services, the organization that administers the partnership, there are over 5,600 shared branch locations and over 30,000 ATMs in the network. Thanks to this partnership, you can access in-person banking services just about anywhere in the US, even as a member of a local credit union. But maybe in-person banking services just aren't that important to you. If you're watching this video, I'd be willing to bet you don't actually visit the bank all that often. I think that's true for most people these days, since we have direct deposit for our paychecks, debit cards to access our money electronically, and mobile apps to check our balances, deposit checks, and move money around. Choosing where to do your banking is now less dependent on how many branches or ATMs they have, and more dependent on how sophisticated their mobile app is. And I won't lie, this is another area where some credit unions tend to come up a little bit short. Traditional banks, especially the big ones, have tens of millions of dollars to put into technology and app development every year. So yeah, they better have a killer app. Most credit unions will have a mobile app, but the user interface might be a little more basic and the capabilities might be a little more limited. It all depends on the particular credit union you're dealing with. Some have amazing apps that rival much bigger banks, while others might only allow you to check your account balance, deposit checks, and move money between your different accounts. The last difference I want to highlight between banks and credit unions is eligibility. Just about anyone can walk into a traditional bank and open an account, but the same cannot be said about all credit unions. Yes, there are some whose membership is available to the general public, but many credit unions limit who can become a member based on things like who your employer is, what university you attend, or where you currently live. That being said, there are a ton of different credit unions out there, and I don't believe it's a stretch to say that everyone is eligible for membership with at least one of them. As I mentioned at the top, I'm a big fan of credit unions. My opinion is that just about everyone should be a member of one and use it for their primary checking and savings accounts. I believe that a financial institution should exist to serve you, the account holder, and so I love the fact that there are no shareholders or profits to worry about. I've personally taken advantage of the shared branch network on numerous occasions to deposit checks, withdraw cash, and get cashier's checks, and I've never run into an issue. I just walk into the shared branch, provide my name, the name of my credit union, and my membership number, and it's like I'm at any other branch. The mobile apps have done the basic things I need them to do, and I've taken advantage of free coin counting and free document shredding perks. In my mind, there's no better place to do your banking than at a credit union. What do you think of credit unions? Are you a member of one? If so, give them a shout out in the comments. If you'd like to learn more about a special type of savings account called a money market account, click right here. And if you're not yet a subscriber, click right here. As always, thanks for watching. I'm Andrew Shear, and I'll see you next time.